Good morning, friends. Today we are going to see introduction to banking and structure of banks. First, let me introduce myself. I am Manoharan. I am with the institute since its inception. I am a postgraduate and I have some more degrees and diplomas related to banking. I have 30 years of experience in banking. Okay, let us start. See, banking in this exam, they are testing you for the knowledge of banking, not in an in-depth basis, but in a wide area. So, the strategy for you should be wide knowledge of banking. So, your approach should be, you should cover the wide areas of banking, then only you will be successful. Because it is not an academic study of banking, it is for a competitive exam. So, you should understand the difference. Okay. So, with that idea in the mind, let us cover the subject. First, basic concepts. Banking is a cornerstone of any economy. What is banking? To understand bank, you should understand the concept of money, finance and financial system. What is a financial system? It is a network of financial institutions, financial markets and financial instruments. Money is a lubricant of the economy. Finance, what do you understand by finance? So, different ideas may come to your mind. For some, it may be a loan of money. For some, it is capital. For some, it is academic study of a subject, commerce. But what is finance? It is all these three. Essentially, providing money when and where it is required is finance. Then, what is money? To understand the evolution of money, we should go back into history. See, in the evolution, in the initial stages, it is called a Robin Crusoe money. You should know Robin Crusoe. He was a lonely man in an island and there was nobody else excepting him. So, there was no exchange. He lived a self-contained life. So, money was not needed. It is called Robin Crusoe money. Then, man has evolved, years rolled by, man became civilized, his needs, wants increased. So, they started exchanging. See, one man is having honey, another man is having fruits. They exchange honey for fruits. So, it is called barter. That is the second stage of money. Then they evolved a standard because this barter has its own problem. First, it was gold. Gold was a precious metal. For so many kilogram of gold, so many items will be given like that. So, now what we are using? We are using paper money. Okay. So, money has evolved. So, banks deal with money. Okay. Banks are a pivotal role in the economy and it is crucial for any economy to flourish. Banks should flourish. Okay. Then definition of banking. Banking Regulation Act Section 5 defines banking as a company which accepts deposits for the purpose of lending or investment, repayable on demand or otherwise, and withdrawable by check, demand draft, order or otherwise. That is the definition given for banking. Then what are the functions of banks? Banks function mainly, it aids trade, commerce, it enables exchange of goods. See, there are certain set of people who have excess savings. So these savings from different people are pooled in the bank, and it is given as loan to industry. Okay. Then from industry generates employment. Again, it gives income to households. Then from that income, after expending for their families, they save, again savings. So it is a cyclic function, money. So from savings, bank, industry, income, savings. So different ways banks encourage the economy, commerce, and trade. Okay. Classification of banks. Banks can be classified on various parameters. Scheduled banks, non-scheduled banks, scheduled banks means they should get their name included in the second schedule of the Reserve Bank of India Act. But non-scheduled banks, that stipulation is not there. But now it is a non-existent. After 1997, there is no non-scheduled bank. Then agricultural banks. Then industrial banks. Then savings banks. Please note down. Then exchange banks. They deal in mainly foreign currencies, foreign exchange, because international trade, foreign exchange has to be taken place. So they deal in exchange banks. Then central banks. See, every country needs a monetary authority to regulate the supply of money, note issue, and aid the government, financially advise them. All these are functions of central banks. So these banks can be classified as scheduled, non-scheduled, agricultural, exchange, central banks, and commercial banks, normal commercial banks. Then banking system. The business of banking can be done in various models. One, unit banking. So banks are small entities, and they are not interconnected with other branches. Usually there will be only one bank or one branch or one or two branches at the most. In US, there are more than 14,000 banks, unit banks. So what they are, how they are doing business is through correspondent banking. Through correspondent banking, they do business. They have arrangements with other banks. Banks in New York may have some arrangement with the Texas Bank. So likewise, they do business. Okay, unit banking. Then branch banking. India, China, UK. So these are all the countries, because every country has its own social, economic, cultural factors that influence the economic activities. To suit them, banks follow different systems. So in US they follow unit banking system, here in branch banking. Here every bank will have a lot of branches. See, in India, State Bank of India is having more than 20,000 branches. They are interconnected, and their organization structure will be branch, regional office, zonal office, head office. Okay. Likewise, they do business, they are interconnected, and in India we are following branch banking because India is a vast country, so we have to cover a vast area. So it is suitable for us. Please note down these two. Then chain banking. So classic example, Lakshmi Vilas Bank, Karur Vysya Bank. But of course now Lakshmi Vilas Bank has been taken over by DBS, a Singapore bank. It's a very recent happening. Before that, individuals, family members, directors in LVB, they will be having shares in Karur Vysya Bank also. So this type of banking is called a chain banking. Then group banking. Here also the concept is more or less same. But instead of individuals, companies will have holding over various banks, 2 or 3 banks. It is called a group banking. Please note down. Then mixed banking. It is a combination of both. Then universal banking. All types of banking activities. All types of banking activities are undertaken. It is called a universal banking. Then retail banking. Where the needs of small customers are made. They concentrate on small customers. It is called retail banking. Then wholesale banking. Where large corporates, the needs of large corporates like Ambani's, Adani's, Tata's, Birla's. Needs of large corporates are met. It's called a wholesale banking. Okay. So please note down. Then the role of banks in the economy. What are the roles? It mobilizes savings. It mobilizes savings from different people, pool the resources and give us loans. Give loans to industries. Okay. Generate employment. More industries means more employment. Okay. Advisors and aids government activities. Helps in monetary policy, helps the government through monetary policy. So these are all the role of banks in the economy. Okay. Hope you have noted down this. Then history of banking. Banking is as old as mankind. The ancient cities of Babylon, Greece, Rome, India, China, banking practices were followed. Some other form, not in the same form as we are having today. In Kautilya's Arthashastra, we call Chanakya also. I mentioned about lending rates, how it should be lent, all those things have been mentioned in Kautilya's Arthashastra in the 4th century BC. Then during the Mauryan Empire, the rule of the Mauryan Empire, there was an instrument called Adesha. It resembles the modern day check. It resembles the modern day check. So it has ancient root. Then 18th, 19th century, we have Seths, Sahukas, Mahajans. These are the communities which practice banking. Then 19th century, British, the advent of the British, they brought the system of banking, European system of banking. In 1806, Bank of Calcutta, it was renamed as Bank of Bengal. In 1809, then 1840, Bank of Bombay, then 1843, Bank of Madras. These three banks are called presidency banks. The Britishers came here as traders, but exploiting the situation here, they became rulers. So they formed a government. So any government requires a central bank. So what they did is, in 1921, they merged all these three presidency banks into Imperial Bank of India. Into Imperial Bank of India. Okay. I hope you are noted down. Then State Bank of India. SBI was formed from Imperial Bank of India. In 1955. The State Bank of India is supposed to act as a central bank for the British government, but they are not fulfilling their expectations. So in 1926, Hilton Young Commission Hilton Young Commission was appointed to go into the problem why it is not effectively functioning as a central bank for the British government. And based on the recommendations, RBI Act was passed in 1934 and RBI started functioning from 1/4/1935. And it was nationalized in 1/1/1949. RBI was started as a private bank initially, then it was nationalized on 1/1/1949. So that is the history of banking. Hope you are noted down. Then nationalization of banks. Initially, private parties started the banks. So naturally, first they will serve to their interest, then only they will serve to the interest of the society. So government, to cater to the needs of the society for socio-economic objectives, they formulated a policy called social control. social control of banks by the government. So, government stipulated certain policies and asked the banks to follow. That is called the social control of banks. It is a pre-runner for nationalization, but it was not very effective. They are not fully complying with the government indications, government's policies. They are not implementing. So, banks were nationalized. What do you mean by nationalization? That means ownership and management both are taken away from the private parties. Ownership and management. Taken by the government from the private parties. That means government is in full control. That is the meaning of nationalization. What for? To cater to the needs of the society. Okay. First phase of nationalization was 1969. 14 banks were nationalized in the first phase. Banks have a deposit of 50 crores. Banks have a deposit of 50 crores and above. At the time of first phase of nationalization, there were roughly 4,200 branches all over India, all the 14 banks. Now it will run into so many thousands. So then, again in 15/4/1980, 6 banks were nationalized. Banks have a deposit of 200 crores and above. 6 banks, banks like Vijaya Bank, Andhra Bank, they came in the second phase of nationalization. Arguments in favor and against. Why banks were nationalized? Because banks started by private parties cater to their own needs. They have their own industries, business. So they collect deposits from people and utilize the money for their own business development. They are not bothered about the society needs of the society. They are not bothered about agriculture, small scale industries, medium and small industries. So that is the argument in favor of nationalization. So banks were nationalized. Then there are arguments against nationalization. What are all the arguments against? Because government control, there is no private control, there will be inefficiency in the operations. Inefficiency in banking operations. There will be inefficiency in banking operations. That is the main argument against nationalization. Then achievements, what are all the achievements? Branch expansion. As I told you earlier, at the time of first nationalization, there was a total of 4,200 branches. Now, SBI alone is having more than 20,000 branches. Imagine what is the level. Then deposit mobilization. Okay. So more branches means more deposits. So, because more branches, they are able to cover more areas, they are getting more deposits. Then rural development. Rural development, because a lot of branches are opened in rural areas, gives a fillip to the agriculture. Agricultural loans are given, small and medium industries, they were given, micro industries, they were given loans, because there was a fillip in the rural economy, rural development. Then employment generation. Then there is employment generation, because of more number of branches means it has to be manpower requirement increased. So these are all achievements of nationalization. Hope you are note down. Okay. Then banking sector reforms. Hope you are note down. So banks government formed so many committees, Chakravarti committee, sorry, Chakravarti committee's main thrust is monetary policy. They are concerned with the monetary policy, price stability, and budgetary deficits. So they made some recommendations on monetary policy. Then Narasimham Committee 1. There are two, Narasimham Committee 1991 and 1999. So two committees were formed. So Narasimham Committee they are concerned with SLR, CRR, and they have also recommended there should be 4 or 5 banks, big banks. Four or 5 big banks and 7 or 8 medium-sized banks. That's what they are recommended. Now it's slowly being implemented because of the merger of banks. Okay, that's a Narasimham Committee 1 report. Note down. Then Goiparia Committee, they are concerned with customer service. Customer service and efficiency of employees. They made certain recommendations. That's the thrust area. Then again, Narasimham Committee 99 is called a second Narasimham Committee recommendations. They have also made some recommendations. mainly banking laws, they made certain recommendations. Then Kapoor Committee 1999, they also made some recommendations. It is related to cooperative sector reforms. It is related to cooperative sector reforms. Okay. So now a lot of developments are taking place. NPAs, non-performing assets, SURFACE Act, so many developments are taking place in banking sector reforms. It is a continuous process, so a lot of developments are taking place. Then 5, the structure of banks. So I told you central bank is a monetary authority, Reserve Bank of India. Under it, scheduled banks and non-scheduled banks. Scheduled banks, as I told you, are banks which find a mention in the second schedule of the Reserve Bank of India Act. And under this comes PSB, public sector banks, state bank group and nationalized bank group. So what is the difference between state bank and nationalized banks? Well, there are two categories. Both are under government control. But State Bank of India, its genesis, from initial stages itself, it is under government control. British, they started 3 presidency banks. Bank of Bengal, Bank of Bombay, Bank of Madras. They are merged into Imperial Bank of India. From that, State Bank of India took its genesis. Because first it was the British government, now it is Indian government. So, from the beginning, the government is having effective control. But in the case of nationalized banks, they are started by enterprising individuals. Okay, here Indian Bank started by Raja Sir Annamalai Chettiar, Indian Overseas Bank started by Mr. Chidambaram Chettiar, Karumuthu Tyagarajan Chettiar. Then Vaishya Chettiars in Karur area, they started Karur Vaishya Bank, Lakshmi Vilas Bank, sorry. They are not nationalized banks. So these banks started by private individuals, they were nationalized initial, we have seen earlier. On 1969, 14 banks were nationalized, banks like Indian Bank, Indian Overseas Bank, etc. And government took full control of the banks. And in second phase in 1980, 1986 banks, Andhra Bank, Vijaya Bank, they were started earlier by private individuals. They were taken control of by the private, by the government. Started by private individuals, but government took control. So that is the difference. Both are called the public sector banks. Then regional rural banks. Regional rural banks is started by ordinance. (26/9/75). By ordinance, President promulgated an ordinance. Okay. And the act was passed in RRB Act was passed 1976. Initially 4 RRBs were started, and Pratma Bank was the first bank started. It is sponsored by Syndicate Bank. For every RRB there will be a sponsor bank. Usually it will be a public sector bank. In the case of Pratma Bank, it is Syndicate Bank. Here, the state government, the capital, they contributed 15%. Central government %, sponsor bank 35%. So that is the regional rural banks, mainly to cater to the needs of rural areas, to help agriculture. Okay, these RRBs were started. Then private sector banks, they also continue to flourish. There was, in fact, now the recent policy of the government is to encourage people to start private banks. The old private sector banks like Lakshmana's Bank, Aurora Bank, new private sector bank like Yes Bank, IDFC First Bank, RBL Bank, these are all new generation private sector banks. Then foreign sector banks. Foreigners are also allowed to start their own banks here. It is a reciprocal arrangement. India will start a branch in UK and UK will start a branch in India. India will start branches in US, New York, and US banks will open branches here, Bank of America. It is a reciprocal arrangement, Citibank, like that. So roughly there are 47 foreign banks are operating in India. Then cooperative banks. Cooperative banks, it is like a pyramid. First, primary cooperative society. It is like a pyramid. Primary cooperative society. Then central cooperative banks. It is the intermediate level. Then state cooperative bank. It's called a Apex Bank. Each state, only one state cooperative bank will be here. Tamil Nadu State Cooperative Bank we have in Chennai. Okay, it's like a pyramid. Societies, primary cooperative societies, central cooperative banks and state cooperative banks. Okay. Usually RBI also have control, but normally they don't intervene. Normally state government manage the affairs of the cooperative banks. Then there are development banks. See, these are all different categories of banks, cater to the needs of the different sections of the economy. Commercial banks give loans to small, medium industries, but there are big projects. say like another project between Mumbai and Ahmedabad bullet train, 1.25 lakh crores. So no single bank can give finance to this kind of projects, and they are long term also. Normally banks give for short term and medium term, but these are all long term. Certain categories of projects, they require funds on long term. So for that purpose, these development banks were started, industrial development banks, IDBI first, then IFCI, but now IDBI is not non-existent. IDBI started a private sector bank called IDBI Bank. Then the parent was merged with the child. That IDBI was merged with IDBI Bank. Okay, now IDBI is not there, IFCI. Then agricultural development banks, NABARD. National Bank for Agriculture and Rural Development. Because rural areas, India consists of rural areas, a large number of villages are there. So agriculture is the mainstay there. So they have to cater to the needs of the agriculturists, rural people. So for that, NABARD was started. It was started in 12/7/1982. It was started in 12/7/82 under the recommendations of B. Sivaraman Committee. The recommendations of Sivaraman Committee. Okay. Hope you are note down. Hope you are noted down. Then Exim Bank, that means Export Import Bank, to cater to the needs of exporters and importers. Exim Bank was started on 1/1/1982, mainly to cater to the needs of exporters and importers and provide financial assistance to them. It is headquartered in Mumbai. Headquartered in Mumbai. Then National Housing Bank, NHB. National Housing Bank started in it was catered to the needs of housing. Because large sections of the people in India, they don't have their own houses. So to provide assistance to housing finance institutions, this National Housing Bank was started on 9/7/1988. They provide assistance to financial institutions who in turn give finance to housing projects. It is headquartered in New Delhi. Okay. So export, import, agriculture. So these are all the development banks. Then SIDBI, Small Industries Development Bank of India. It was started in 2/4/19. Started in 2/4/1990. Small Industries Development Bank of India. Mainly to cater to the needs of MSME, micro, small, medium enterprises. Formerly they were called small scale industries. Now they are categorized micro, small, medium enterprises. They cater to the needs of these enterprises, and it is headquarters in Lucknow. and SBI is the majority shareholder. So these are all the development banks. There are special category of banks called development banks. So these are all commercial banks. Commercial banks, they give loans on small and medium industries, large industries, on medium term and shorter term. But here they give loans for a longer term for large projects. So this is how banking is structured in India. So we have seen structure of banks. So we have seen banking sector reforms, different committees and developments, the nationalization of banks, objectives of nationalization, first phase, second phase, then arguments in favor and against, what are all the achievements. We have seen then history of banking from earliest time, so till now, then basic concepts of money, finance and financial system, definition, functions and other things we have seen. If you have any doubts, you can get clarifications. I will be more than happy to clarify your doubts. So with this, we close this session and we will meet at a later date with different subjects. Thank you very much for listening. Thank you.